Drew Houston, co-founder of Dropbox and now a public company CEO. Dropbox raised $756 million in its IPO. You've talked about reinvigorating your spending. Where's this money going to go as you move forward as a public company?
Well, we've got a lot of opportunity in front of us, and so we're just keeping up with our growth. Fortunately, our company is funded by our customers, and so it's one way to strengthen the balance sheet, but it's an exciting day for us.
Does this go to hiring more developers? Do you boost R&D? Are there certain parts of the product that you're paying special attention to that you think has the potential to kind of keep growth going?
For sure. So we'll continue to grow our technical teams. Actually, we'll be growing the entire company. So we have a ton of opportunity in front of us, and so. Yeah, we're going to get back to building pretty soon.
So you were one of the first movers in kind of the file storage space. That kind of helped you grow to this scale of 500 million registered users. 11 million of those actually open their pocketbook for you and pay you. Still, that's only about 2.2%. How do you boost that portion of users that actually pay you for the services of that large pool who actually uses Dropbox?
Sure. Well, the first thing we do is make the product as good as it can possibly be, and so give people good reasons to buy Dropbox. And so, yeah, we look at that 11 million subscriber number, and by any standard, that's a large number. But at the same time, there are hundreds of millions of people using Dropbox, and we're solving a universal need. So. We certainly see a lot of opportunity. We're not going to run out of people who need Dropbox anytime soon.
When you do look at that 2.2% that does pay you, are you happy with that? Where would you be happy?
Oh, I always want it to keep growing. So I look at the 11 million out of, we've got 500 million registered users. There's 1 billion knowledge workers in the world. So we're certainly focused on how do we reach more customers? How do we make Dropbox more useful? But it starts with building a great product.
On the point of customers, who is the ideal Dropbox customer? Are you selling directly to the C-suite? I know you get a lot of your paid users from your self-service platform. Who is the ideal person who will actually pay you for the tools and products that you've built?
Well, so it's really companies of all shapes and sizes. So, and one of the great things about our model is we are able to reach millions of businesses because so many people start using Dropbox at home and bring it into work. And so we've got everyone from really large customers and folks like the NASDAQ here, but we also reach many small businesses and everything in between.
Well, during the course of the roadshow, I heard you all talk a lot about teams and selling into teams and more of a focus on the collaboration tools that are fairly new for Dropbox that you've been developing. How do you think about selling into teams versus selling to individuals as you've kind of had as you've had prowess in the past?
Yeah, so we find that, again, people bring Dropbox from home into work, and our model is pretty different from the traditional enterprise software sale. We like to say we're applying the consumer internet playbook to business software, and so that means all the hundreds of millions of people using Dropbox out there bring it into their companies, and we find that often before we make a sale or before we talk to IT, there are hundreds, sometimes thousands of people actively using Dropbox and often paying for Dropbox. So we're able to take advantage of that scale that came from our consumer roots and our freemium model to drive massive adoption in businesses. So we're really excited about it.
When I think of the other consumer focusing companies like Google or like Microsoft with its Office suite, they've had to build up a sales force, build out their marketing team to sell their newer enterprise products, whether that's cloud or some of the other tools that you actually compete with. Is a sales team in your future? I know right now you don't depend on that for the money coming in, but at what point would there be a tipping point where you say, hey, look, we need sales folks to sell into the C-suite?
So we certainly have a great sales team, but what we're able to do is be really efficient. Is because we have all of these hundreds of thousands of businesses actively using Dropbox, and so we're able to get a lot of leverage because our salespeople are really talking to companies and talking to CIOs who already have a ton of Dropbox adoption. And so when you add it all up, we end up spending about half as much on sales and marketing as a percentage of revenue as the typical SaaS company.
And that's how you intend to operate going forward?
Yeah, we like to say we have 500 million salespeople because, again, all these people bringing Dropbox from home into work and the scale that came from our consumer roots and the viral nature of how we grow.
Talking to public market investors before you sold these shares, one concern is the fact that even though revenue growth is strong, more than 30% on $1.1 billion in revenue last year, That did come down a tick from the revenue growth in 2016. Why did that growth kind of pull back? What are you expecting going forward?
Well, we're growing pretty fast. So we were the fastest SaaS company in history to $1 billion run rate. And again, we look at that 11 million number, and it's big, but we're addressing a need that every team and every company in the world has. So again, there's a lot more people that need Dropbox.
You did list at a very volatile time in the markets. Tech stocks have been selling off for the past few days. There's some uncertainty going on right now, but you still managed to price above a marketed price range that was increased from what you initially set. Why the investor demand? What specifically did you hear from folks why they were so excited to get into your stock?
Well, I think we have a pretty unique balance of scale, profitability, and growth. And part of why we're so excited about being a public company is because we're ready. And so I think investors appreciated how our model is pretty different. Again, applying the consumer internet playbook to business software, that viral growth, that scale, and the efficiency of how we can acquire customers. And you look at the rate of improvement or the rate of growth in the business and the rate of growth and profitability. So that the reception's been really good. So
rewinding back to 2015, you've talked to me about how you kind of took your salt, refocused the business, focused on the bottom line, and got to the point where you are now, where you're free cash flow positive. Looking back, what were kind of the instrumental things that got you to the point where investors can look at your books today and say, hey, the growth looks pretty good, but the bottom line actually looks pretty good as well?
Sure. Well, it took focus, and so since the beginning, it's been amazing that literally anyone or Dropbox solves a need that everyone in the world has. But we saw that the biggest opportunity for us, and where our happiest users, we were using Dropbox to share and collaborate. They appreciate the storage too, but Dropbox is a place where people come together, or where people come and work together, and so. I would say both the growth of the business and, again, the efficiency and scale that comes from our freemium model and the viral growth and our ability to acquire business customers really efficiently and cheaply. And then we've also made a number of investments in our infrastructure, which have dramatically improved our margins. And so we've been making improvements across the board.
And whether you like it or not, you've been kind of the poster child for a number of twists and turns in the Silicon Valley ecosystem, whether it was spending excess before you tightened up your cost structure, or employee perks, or the mutual fund write-downs of a few years back. Now, everyone I'm talking to is pointing to your listing saying, we hope this is the deal that wipes away the stigma that going public at a valuation lower than your private valuation is a bad thing. What do you think about that?
Well, I think it's life as a public company. You're gonna have the markets are gonna change, and you get this. What we say internally is we're gonna get this outer scorecard, which is gonna have all kinds of things shifting around. And so what we need to focus on is what I call our inner scorecard, making sure that our customers are happy, and that we're building the best possible products, and we need to stay focused on that.